Recording in progress.
Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh and good evening. Thank you for being here this evening and welcome to our new series of More Than Just Money, where all your money curiosities will be answered. Let me first introduce myself. My name is Nurul Iman. I'm currently an investor relations and data analyst in Capital Boost. I am also in the research department of IF at SG covering Sharia and finance. Islamic Finance at Singapore, or IF at SG, is a community of scholars, finance professionals, and students in Islamic finance. What started as a WhatsApp group has now become a society in the making with a long-term goal to serve the Singaporean community through Islamic finance. Tonight, I am pleased to share this platform with Mr Sani Hamid, Director of Economy and Markets in Financial Alliance, while also leading the Islamic Wealth Department. Happy to learn from you again in this opportunity, Mr Sani.
Thank you. Thank you for having me.
Right. All right. In today's first episode, we will be talking about investment. Investment has been a very big and hot topic, yeah. And we understand that the first thing when we talk about investment, it will be growing of one's wealth, getting rich, or to achieve financial sustainability and also early retirement. But a survey of Singaporean millennials showed that while 71% of the respondents had the intention of making investment, and just 38% of those surveyed considered themselves knowledgeable and informed about investing. 41% on another hand who had not yet started planning their finances, and the lack of disposable income to do so. In the same survey, 38% of respondents stated that they have not started financial planning. All right, Mr. Sani, we know that in these uncertain times, in this challenging time where we are facing COVID-19, and there's increase of unemployment and salaries not going any further, is this the right time to do investment?
Well, that's a good question. And once again, thank you for having me. And to all the participants who have dialed in, Assalamu alaikum warahmatullahi wabarakatuh. In investing itself, you know, if you were to ask people in my position, we would tell you basically there is no right or wrong time. It is basically a process whereby, you know, someone sits down with you, presumably a financial planner, will determine whether you have a financial goal, whether to retire, to pay back a particular loan, to save a certain amount of money, and so on. Okay, and therefore plan with you to use investments as a vehicle to reach that particular financial objective or financial goal. Okay, so investment is not something whereby I have people coming to me and say, when they come to me with a lump sum of money, they say, I want to make I say, what do you want me to do? Is that to make as much money in the shortest possible time. But that's not investment. That's a vehicle towards reaching a particular goal. Okay, so the first answer to your question is, you start at any point in time because you will always have a financial goal. Okay, the second part of the question then refers to, is it the right time when things are volatile, things are uncertain and such? Again, it then boils down to what type of investment you do, because you can, after all, craft out a portfolio which, for example, is more defensive in the period whereby you think markets are too volatile. You can then switch it over to a more aggressive portfolio when you think that maybe it's near to the bottom or so on and so forth. So again, there are ways and strategies, for example, to adopt when things are a bit uncertain. I mean, a lot of people I know today, because they feel the market's maybe a bit too high, so they don't go in what we call a lump sum. They tend to go in what we call regular savings, or on a monthly period, they put in a little bit. That tends to take out the volatility from one's portfolio. So by and large, you know, when you get to do it, I would then say invest, but you need to know how to invest, basically.
Right. So, Mr. Sani, as you said that investment is the vehicle. Okay, and you also mentioned that when we talk about the types of investment, it's more to the how and more to which type of portfolio would you like to invest. But if someone that is a beginner for investment, and they do not understand this concept of aggressive investment, and they do not know I mean anything, but and the first question they will ask is the types. Immediately they will go and ask about, is it stocks, is it golds, is it assets, is it REITs? So what will you advise if they have not yet understood the aggressive portfolios and etc.?
Yeah. So I think from the you mentioned about the survey that you had. So I think roughly, if I remember the numbers correctly, about 30% are doing investment. Another 1/3 of your survey participants have thought about it, but maybe haven't done anything, and so on. So there is this group which probably knows how to invest because they've read it up, they've watched YouTube and such. So that's the 1/3 or 30% that you mentioned who are doing investment currently, for example. So they are the DIY type of investors, which is quite common nowadays.
Yeah.
Then there is another group of investors who may not have the knowledge, may not have the time to learn even. Okay, and that is where basically there are a few options. Option number one, for example, you can go and seek the advice of a licensed financial planner. Okay, so this a licensed financial planner will then sit down with you and then will help you go through, determine your financial objectives, determine what's the best vehicle, best composition, best portfolio for you to adopt to reach a certain objective. Okay. And nowadays there are things where it's like, there are robo advisors, and so there are quite a few things that you can actually do even if you don't have the knowledge. So I think nowadays it's not as bad as the last time, maybe when you really don't have knowledge and you're really scared. Now the information is just quite widespread.
All right, Mr. Sani, we understand the nature of investment right now and the options that we have in today's days, that knowledge is vast and etc. But let us narrow down. All right, when we talk about investment and we want it to be Sharia compliant investment specifically. If those investors that are, like you say, DIY investors, right, or those that have the option to go and seek for advice, that's another group of people, right? So, but let's just like generalize everything. Like, how do we find what is the criteria to look for when we are looking for Sharia compliant investment? Like for food, for example, we have the halal logo sign, right? Which will tell us, okay, this food is halal, right? And then we can go through some ingredients that's going to tell us this is permissible, this is not permissible. So what about investment, specifically for Sharia compliant investments?
It's basically quite simple if you look at it. As you mentioned, in order to determine whether a food is halal or not, you basically look for the halal logo, whether it's in Singapore, whether it's in Malaysia. As long as it carries a halal logo, you then basically are confident in consuming the food. For investment, typically we don't have that logo, but what we have is basically we have what we call Sharia committees. So if an investment has a Sharia committee, and normally they will make that known, and sometimes you see it in the name. So you may see the name having a little bit of an Arabic sounding name, or they may have the word Islamic on it and such. Sometimes it's in the details, it may mention that this is Sharia compliant and so. Okay, as long as there is a committee, then basically you can take a big a leap of faith to say that yes, this is basically a Sharia compliant product by itself. If it doesn't have, then it doesn't necessarily mean it's not Sharia compliant. It's just that we are then left in a situation where we're not sure.
So hence, if we are not sure, we are in that gray area. Okay, what if in that gray area there's nothing that goes again with the Sharia compliance? There's nothing. There's nothing that is prohibited. If the investment is into, for example, transportation, for example, eco environment and etc., has nothing to go against Sharia compliance. What do you think about that gray state? We are uncertain, but we know that the activity of that specific product that we want to invest in has nothing that goes against the Sharia compliance, but there is no Sharia community inside that specific investment?
That's a good question. So number one, you would only go down this path if there is no Sharia substitute or there are no Sharia investment available. Because if there is a Sharia investment, i.e. an investment with a committee, Sharia committee, then you ought to be opting for that rather than trying to do your own filtering and such. Yeah. The way to go about it is very much the same way as the committee would go about it. Number one, you need to be certain that the business model itself or the business activity itself is Sharia compliant. As you mentioned, transportation and so on and so forth. Okay, IT and so on. Okay?
Yeah.
Then number two is you need to do the filtering of the financial ratios. Okay, so basically you will have to look at things like interest-bearing debt, amount of cash that they hold, and so on. And depending on which particular rule book that you use, whether it's IOFI, Security Commission Malaysia, FTSE, whatever the case is, you then determine whether the ratios fit within the so-called compliance numbers, 33%, below 33%, and so on. Okay. The tricky part is sometimes these numbers are transparent, sometimes these numbers are not transparent. Sometimes we have to also understand that when there is a committee basically not only gets hold of public information, but a Sharia committee also knows non-public information. Because obviously, if I, as a company, want to be Sharia compliant, I get a Sharia committee to do that particular exercise to see whether I'm Sharia compliant. I'm going to provide that committee all the necessary information. And some of this information are not publicly available information. Mm-hmm. So sometimes committees make decisions based on non-public information, which then makes it very difficult for an individual himself or herself to try and make an assessment because you're outside of the company and you don't gain access to this kind of non-public information. So in other words, it becomes a little bit dangerous when we try and ourselves deal with what we call publicly available information, because there may be some information behind it that we don't know of, which actually contravenes whatever results that we come out with.
Mm-hmm. All right. Okay, so means there's no much transparency in the values, the number that we can actually determine by ourselves. Is this Sharia, this 100% Sharia, or it's not, right, Mr. Sani?
Exactly. So, okay. But really, it's tricky when we really don't have any options. And therefore, then it really boils down to how do we go about it. I remember the last time in Singapore when there were really no Sharia compliant instruments. It came to a point where, for example, under unit trusts, there were no Sharia compliant unit trusts many years ago. When I first started out, it was very few and very little. In fact, there were none at all at one particular point. We then had to go to the point whereby we would scrutinize the holdings. We would open the annual report of a mutual fund unit trust, go through each and every holdings, and some of these unit trusts hold about 100 shares and such. So each and every share, we would actually try and do an analysis on whether this is compliant, non-compliant. It was extremely tedious a process to do. So I cannot imagine individuals doing it. It's going to be quite tedious. And alhamdulillah, nowadays, of course, we have Sharia compliant options, but we also have softwares that can help us do some of these things. So it's a lot better nowadays. But again, like I say, I would advise individuals against trying to do this, especially if there are Sharia compliant, straightforward Sharia compliant options.
Okay, Mr. Sani, maybe if I could ask you, why maybe the demand for the non-Sharia compliant investment, and people are trying to find these gray areas of investment, are they halal or not? Maybe there is high possibility that they have attractive return than Sharia compliant investment.
Yeah.
Okay, so what's your comment to that? Like, that's the reason why people are doing research for these gray investment. Not gray investment. I don't label it, but the one that we need to do our own homework.
I know.
So, do you agree with that statement where the return is not as attractive as the non-Sharia, and also this we need to do homework type of investment?
From where I come from, meaning to say from the I deal a lot with mutual funds and such. Okay. We have mutual funds, for example, that invest in gold mining companies. One is Shariah-compliant, another one is not Shariah-compliant. We have global equity funds which are Shariah-compliant and non-Shariah. There are, of course, the peers which are non-Shariah-compliant. When we put them side by side, at times, most of the time, they actually have very little difference. At times, even sometimes the Sharia one outperforms the non-Sharia one. So, because nowadays there's really not a lot of difference when it comes to whether something is compliant or non-compliant, unless a particular investment has, for example, a lot of the haram sectors inside it, finance and stuff. Then of course it's different. But sometimes you put the two gold mining companies, not Sharia-compliant, non-Sharia compliant gold mining companies together. So they move in tandem. So there's not much to differentiate there. Okay. But back to your question, if there is the first thing to answer is, typically, do we find very large differentiation between Sharia and non-Sharia? If you take it from the same peer group, my answer is not likely, or very seldom do you find it. Okay. But if you come across an investment gives you a very high return, and you're interested to say, hey, is this Sharia compliant or not, and stuff like that, of course, you can do your own analysis, your own screening and such. We did such a thing. We came across, for example, a particular fund from the UK, private equity fund, dealing in healthcare sector and such, which we felt was a very good private equity fund. When we looked at it, we kind of said, this thing looks to be Sharia compliant, healthcare, specialist healthcare, brain injury, spinal injury, deals in all these kind of things. So what we did was we brought the fund to our Sharia advisor in Malaysia, Dr. Akram Lalin, okay, whom then Dr. Akram is actually heading ISRA in Malaysia, okay. So ISRA then formed a committee to actually a working group to actually look into the fund to see whether the fund was Sharia compliant, and came out yes, the fund was Sharia compliant at the end. So a conventional fund, a high yielding, a high return conventional fund, eventually became Sharia compliant because we went through that process. Okay. But as you can see, it's an elaborate process, and again, it's one which, as an individual, it's difficult. I would say. Yeah. It's tricky. You don't want to end up in a position where you are saying something is halal when it is haram. I mean, that's a dangerous position to be in.
Mm-hmm. All right, and one more. If the definition of ethical investment, is ethical investment considered as like healthcare and transportation? It is, right, Mr. Sani?
To an extent, it is. It's a kind of a social aspect to it.
So if one can be confused with what's the similarities between Sharia compliant investment and ethical investment.
Right.
So can you share with us what are the similarities and differences? Because after you have said about, there are some that are conventional that are initially actually Sharia compliant after going through the screening, right?
Exactly.
So what is actually the similarities or the differences between this ethical investment and Sharia compliance?
Okay, so basically, you have the nowadays ESG, environmental, social governance, SRI, socially responsible investments and such. Okay, and then you have, on the other hand, Sharia investment. If I were to, for example, draw a vein chart, which is the two loops, and they overlap, there will be this middle portion which overlaps, and there will be this two portion which doesn't overlap. What do I mean by that? There will be certain instruments, certain sectors which will be very similar. I think no one doubts that, for example, healthcare is both socially something on the social side and also something on the Sharia compliance side. Both will actually overlap and fall within acceptable by both groups. Okay, but there are also sectors which may not fall or may not overlap. I'll just give you an example. While Islam or Sharia compliant, the side of it does not accept anything that deals with interest. On the SRI and ESG side, may still accept interest-bearing companies which high level of debt. Even banks, maybe it is an infrastructure bank, maybe it's an agricultural bank. Therefore, it gives out loans to farmers and such. So it's considered to have a social benefit to it. But from the Sharia side, because it involves interest, so it doesn't fall within the Sharia preview or it falls within the Sharia restriction. On the other hand, there are things on the SR side, ESG side, which are not accepted. Meaning to say, for example, fossil fuel. There are a lot of SRI funds, ESG funds today, which will avoid investing in fossil fuel oil companies. But if you look at the Sharia side, it is still considered to be, by and large, acceptable as long as it meets, number one, the business model, and number two, the filtering of the financial ratios. Okay. So again, like I mentioned, there are things which overlap, and there are things which are quite peculiar either to the ESG side or either to the Sharia side.
Hence, as you mentioned, Mr. Sani, about like the type of investment that there are overlap, like the fossil fuels and etc. I mean, these things are not in Singapore. So, as a Singaporean Muslim, for example, do they need to resort their investment if they want to take these high risk types of investment? Okay, resort to overseas investment?
Not really, because I'll give you kind of like a very quick universe of available Sharia investments here in Singapore. Big umbrella wise is of course Sharia investment. Then you break it up basically into two subsets. One subset is probably, you can term it as maybe regulated investments. Another subset is unregulated investments. What do I mean by regulated investments? Regulated investments are investments which have a particular act or regulation governing it, whether it's under the Securities Act, whether it's under the Banking Act, whether it's under the Financial Advisory Act, whatever the case is. Okay, and of course the other one doesn't really have an act governing it. When it's not governed by an act, it doesn't necessarily mean it's a scam. It's just basically there's no act governing it. Of course, you would prefer to have an act, because when there is an act, the authorities then will place certain conditions upon people who are governed under the act. You have to submit your audit, you have to do this, you have to do that, you have to make sure you have a trustee and so on. Okay, so these are the two groups. In the group which are governed by acts, you have basically Shariah-compliant unit trusts, mutual funds. We have basically sukuks, we have basically global equities, we have a few others. Okay, and then you have the securities, which means these are the shares traded on the Singapore Stock Exchange. And these shares basically, we only have one particular share which is Sharia-compliant, I would say from birth, that means from onset, which is Sabana REITs. Okay, but the rest all are deemed, or rather they go through a filtering process, which I mentioned, and you can actually differentiate then between shares on the Singapore Stock Exchange, which are compliant and non-compliant. And there are softwares to do that nowadays. Okay, so on one hand, you have all these which fall under the acts, and then on the other hand, you have some investments, investments from places where you work, capital boost. You have investments which are tied to maybe land banking. You have investments which are tied to other things. And like I mentioned, a lot of these are Sharia compliant. They have even Sharia committees. Okay, and to me, basically, it's acceptable for Muslims to invest in, except that one has to be aware these are not governed by certain acts, and therefore, in terms of regulatory supervision, one has to accept that there is lesser regulatory supervision vis-a-vis those under certain acts.
All right, thank you, Mr. Sani. Just a curious question. As someone that is really experienced in this industry, Mr. Sani, how do you see the growth of both Muslims and also non-Muslims towards Sharia compliance investment in Singapore specifically?
The non-Muslims don't care whether it's compliant or non-compliant, to be honest with you. They just look at, of course, now people are more sensitive to the fact that whether it's ESG and such. Okay? But our experience is they will look at returns. So basically, we have seen before, and I think I gave you the example of a unit trust, which is Shariah-compliant, dealing in gold mining companies. And that's one of them. And there are about 3 or 4 more which are non-Shariah-compliant, also dealing in gold mining companies. At times, we see a lot of inflow into the Shariah-compliant unit trust dealing in gold mining companies because it outperforms everybody else. And these inflows come from non-Muslims. Because why? All they say is, this is doing better, I want to get involved in this one. Okay, so the Sharia aspect doesn't really drive their decision-making when investing. Of course, for a Muslim, you basically very clear-cut, you avoid the others and just go straight for the Sharia-compliant one because, that's what we are deemed to do.
Right, Mr. Sani, I would like to just ask a question, that is being asked here. Like, if we feel that, all right, like CIMB, Maybank, also OCBC, they have all these products or services like saving, Wadi'ah and etc. Okay, but if a Singaporean, a Muslim Singaporean would not like to be in those services. I mean, would not like, but they don't see the importance. So what is the advice that you could give to create awareness about Islamic finance?
Right.
I mean,
you're talking about
supply is there. The supply is there.
Yeah. Muslim Singaporeans, right? You're talking about.
Yes, practically, because we do have instrument, we do have the services.
Okay. So I think it really goes all the way back to faith. The fact of the matter is, why do we give? If you go back to food, why do we opt to take halal food and versus non-halal food? Why? Because our religion says consume only food which has been slaughtered in the correct way, the Islamic way. And similarly for muamalat, for these kind of transactions, it's very clear in the Quran. It says that basically you ought to avoid riba. You ought to avoid in today's world, today's context, more or less is interest. Okay, because a person who consumes interest, basically Allah and the Messenger Sallallahu Alaihi Wasallam declares war on the particular person. This particular verse itself, and I've been repeating this many times, it is only one particular verse in the whole Quran where Allah and His Messenger declares war on a believer, you and I, a Muslim. Okay? In no other context does Allah declare war even on, it doesn't mention on a murderer, on so on and so forth, only on someone who consumes riba. I mean, that in itself should be a huge red flag to us to say that this is something which is important for us to take seriously. Okay? The second thing basically is, and this goes back also to when you mentioned about high returns and so on and so forth.
Yes.
Yeah. As Muslims, we believe, and I ask, if you ask any Muslim, is this world permanent or is this world temporary? And the answer is very clear. It's a temporary world. The permanent world is in the hereafter. Okay. So we Muslims tend to see things in two, in the Malay word would be dua alam, two environments, this world and the next world. Whatever we do basically transcends this world and also includes the next world. Okay. So if I were to put in front of you a Sharia-compliant fund which gives you 2% and a non-Sharia-compliant fund which gives you 10%, which one would you take?
Definitely Sharia.
Yeah, okay. So it's very compelling to take the 10% because it gives you higher return, correct?
Yeah.
But because of our faith, because of what is written in the Quran, which is the word of God, and tells us do not take the one which is 10%, take the one which is 2%. We take the one which is 2%. Does that mean we lose out because we are taking 2 and foregoing the 10? No, it doesn't. Because Allah then tells us that when you fulfill my commandments in this world, I will return or reward you in the hereafter. So don't just look at 2% as 2% here. Look at it as 2% here and multitude of returns in the hereafter. And when you bring those two in combination, you will then realize that, hey, actually, really 2% is not losing out. It's actually a lot.
Yes, all right. That is a mind blowing to actually look at Islamic finance deeper than just the return, but
Exactly.
it's a test of faith. Is
Exactly.
looking at our best of both worlds and understanding that this world is temporary and what we are chasing for should be worth the value for both. Yeah,
Yeah. I
mashallah.
mean, we strive to gain the pleasure of Allah, and this is one act which actually is striving towards that.
Yeah. Okay. MashaAllah, Mrs. Sani. All right. Talking about the services that Singapore has, what about maybe you could share about what FAiWA is doing right now? You have been offered in partnership with Phillips, which is launched in April 2019. How has the transaction been so far? Yeah.
Oh, uh, FAiWA stands for Financial Alliance Islamic Wealth Advisory. We're an advisory firm, but I've created a department within the firm to cater for Islamic, for our Muslim clients, basically. So everything we do within that department is Shariah-compliant. Okay? We have a Shariah advisor, both Dr. Akram in Malaysia and also locally, Ustad Harun, who is with us. Okay. So we, throughout the years, have been trying to, and I also have to say that there are many groups out there who are also striving to promote Islamic finance in Singapore itself. So we work hand in hand. So on my side, what we try and do is we try and innovate. We try and bring up products which are Sharia compliant. Because of the lack of it, we try and bring in more and create more. So one of the products that we've created with Phillips basically is a REITs product. So basically what we do is we will provide the screening for the REITs on the Singapore Stock Exchange. And there's many REITs. And then we provide that universe of Sharia-compliant REITs over to Phillips Capital. And then the fund manager, who is a non-Muslim, but he will then use his or her skill to then choose which is the REITs which they want to put inside the portfolio. So our role is basically to define the Sharia universe for the fund manager to actually pick from.
All right, Mr. Sani. Well, what about other products by FAiWA? I understand that FAiWA is an independent financial advisory firm, as you say just now. Does it mean it offers more investment opportunities that people might not know? Like in brief, like this, like that maybe private equity and etc.
Yeah, so like I mentioned, we also have this private equity fund which we have assisted to make it from non-Sharia compliant to Sharia compliant. Okay, but all the while it was Sharia compliant, just that it didn't go through the whole process. So when we brought it through the process, it came out as Sharia compliant. So we have that with us. We also try to do things with existing investments. Give you an example. We have created a Hajj and Umrah portfolio. So basically, we are trying to encourage Muslims to save for their Hajj and at the same time also to save for their Umrah. We tend to get carried away most of the time because of the way it's I guess it's cultural, I guess it's society, I guess it's the environment that we live in. We don't think twice taking holidays to Australia, to Korea, and many other places. But then we forget that actually we haven't saved up for a Hajj, and we haven't, and because the queue for Hajj is so long. In Singapore, it's I think 40 years or so. In Malaysia, it can even go to 80 years, my understanding and from my reading. Okay. But we can't just say that because it's so long, I forget about it, I don't bother about it. No, because it is, after all, one of the pillars of Islam. If we profess our faith, and then we have to follow certain things, pray, fast, and one of them is to go for a Hajj. And even if we cannot realistically do it, i.e., the time frame is just too long, we need to still show effort. And therefore, we need to save up in order to try and make it. Who knows, Allah may decide one day that suddenly our turn just pops up suddenly. But if we are not prepared, where are we going to get the money from? Okay. And meanwhile, I think it's also good to encourage people to save up for their Umrah, because yes, your Hajj maybe is 50, 60 years away, but as a Muslim, you really want to experience going to Makkah and Medina. And Umrah is really the only way you can do it. So save up for it. Okay. So I'm not saying you can't go to your usual holidays in Australia, New Zealand, and South Korea. But as Muslims, we ought to prepare, or we ought to actually set aside money for this aspect also. And so we're doing that also. And we're doing things like zakat services. We will actually calculate zakat automatically for our clients who have zakatable assets, cash endowment, cash investment. And we will send them letter every year to say, dear so-and-so, this is your zakat payable, so that we remind people you need to pay zakat. It's not only fitrah, it's also on your assets.
All right. So, Mr. Sani, when you mentioned about your the zakat, it's a very interesting service, and there's a question here which asks, does Sharia investment, Sharia compliance investment, is it zakatable? I mean, do we need to
zakat or not? Yeah.
Because pay zakat or not? Yeah. There's one question that asks about.
Yes. The two conditions for zakat. Basically, when you meet the both criteria, hal and nisab, the length of time, basically a year, and the nisab is basically the minimum amount, the threshold, which I believe now maybe about 6,000 odd, if I'm not wrong, according to, because it's based on gold, so it fluctuates a bit. Once you meet that criteria, you need to pay zakat. So
zakat investment is zakatable. I mean,
investment is zakatable, correct. So there are some very rare, but I've come across some products where they do the zakat on your behalf, but these are very rare. So unless that happens, you as an individual will need to do it.
All right. Okay. So, Mr. Sani, let's go to the next question. Okay, is investing in POSB Digi advisor and other robo advisor haram? I mean, we have mentioned about it on the earlier part.
Okay.
But just to answer the question that is being asked by the mass, so is investing in POSB Digi advisor and other robo advisor haram?
Yeah. So if we go through how to look at it, and I mentioned earlier, is there a Shariah committee? I guess no. I don't think POSB or whoever has. So if that robo advisor has a Shariah committee, then basically it is halal. If it doesn't, then basically they will consider to be haram. Unless you are able to then look into what holdings they have. If this robo advisor has 50 stocks, and then you individually will go into a software, and there is a software available for retail investors. Type in the name of the stock, and it comes out whether it is halal or haram. And you diligently do your homework to check that all these 50 stocks held by the robo-advisor is halal, then you can safely say, yeah, looks like it's halal. But there's a high probability that there will be stocks in there which are not. It's almost impossible to have everything which is Shariah compliant. And we must always remember that stocks which are Shariah compliant today may not be Shariah compliant tomorrow. Why? Because one of the criteria is financial ratios, and ratios change. Today, the debt level may be below 30%. To next month, the debt level may be above 30%, for example. Okay, so there's continuous monitoring that needs to be done. So again, it puts the burden on us to do so. And I think it's a heavy burden, in my view, which I think we need to be very careful about. Are there robo-advisors out there which are Shariah compliant? They are. I mean, I'm not here to mention names and such. I think you can do your homework. If you do your homework, you'll probably come across those that are Shariah compliant.
All right. Thank you, Mr. Sani. If you will allow me to summarize for today's episode, not all investment are made equal. First and foremost, we spoke about in this time, in this COVID-19, we should, consider investing, and invest according to the portfolio, the types. Look at the types and the aggressiveness of the portfolios, the strategies that we need to use in order for us not to lose in our investment. That's the first one. And for the second one, if we are not sure how to look into these types of portfolios and strategies, we have financial advisors that we can approach and ask for guidance to actually lead us to investing. And also, we talk about the two types of zakat and the ethical investment. The two types of investment:
Yes.
the ethical investment and also the Sharia investment. As it's being said, to know in between a Sharia and non-Sharia, the gray investment shade is a bit tedious for us. Hence, we stick with those that are clearly Sharia compliant. Other than that, it's possible for us to invest, but it's tedious, and we need a lot of knowledge and a lot of effort in order for us to actually attain. Yeah, and there's a lot of numbers and details, and things keep changing. So yeah, and also the third one we get from this meaningful investment. Not all investment are made equal. The 2% that you mentioned about
Yes.
a 2% attractive return, and also 10%. Okay, it's about the faith over the return, and it's about the reward that we want to attain. After all, in best of both worlds, and we want to do everything as much as possible to please Allah Subhanahu wa Taala, because after all, this life is temporary, and definitely the return of 2% is not much. I mean, the 10%, the attractive return is not much. Consider 2% with the pleasing of Allah Subhanahu wa Taala, finding Allah's pleasure. So getting that 2% as a return, standing the what you call that, the interest, the how Rasul Sallallahu Alaihi Wasallam actually explain the explain what is the consequences of one that actually handles and eat riba interest. Okay.
Yeah.
And also, lastly, we understand that one of and lastly, we ever wonder what happened to our wealth when we depart from this world? We have collaborated with the ever lovely folks from FAiWA to bring you It Won't Be Soon Before Long. The 2-hour workshop aims to give you a necessary skills and ideas on how estate planning works in Singapore. At IFSG, we often receive queries from the community relating to will setting and estate planning matters, understandably so, as it is a topic that is close to the heart. So if you want to learn how to manage your wealth so that all those years of working your socks off and your loved ones receive their rightful shares, join us in our upcoming events. Look out for the event details on our social media. Once again, Mr. Sani, I believe that if we can go on in this topic, investment, it's really interesting. There's a lot more that I believe that you would like to share with us, but time is not on our side. So for those of you who have started investing and etc., do grab this opportunity to join us in this 2 hours program. It won't be so long before. It won't be soon before long. Sorry, it won't be soon before long. Hence, besides that, look out for IFSG social media for the next episode of More Than Just Money series, where all your curiosities will be answered. So once again, thank you, Mr. Sani.
Thank you for having me.
And to all the participants, and see you. All right, thank you so much. And good night, and stay safe, and start investing.